What if the little-known tokenization trick happening right under our noses sends XRP flying past $100 before your Uber Eats order even arrives? Now hang on, because this ride, it gets wilder than a meme coin season. Now, you know that feeling when you find a crumpled 100 dirham note in your back pocket of your jeans, and you haven't worn them since last winter. Now, multiply that by a few 100,000%, for example, and that's the kind of buzz, racing around, Ripple's XRP ledger right now, right? Real world assets are being chopped into tiny digital slices. Institutions are stockpiling XRP like it's the largest slice of pizza at a LAN party, and suddenly the math starts whispering three-digit price. But before you throw your rent money at the kind of green buy button, let me walk you through the story from the very first breadcrumb to where the trail points next. And by the end, you'll know exactly why some analysts are kind of bold-facing $100 while others are side-eyeing the calculator. And trust me, you don't want to bounce halfway through this. There's a twist in here bigger than the plot of an M. Night movie. Okay, so I was half awake last weekend, scrolling through charts with one hand and balancing a dangerously full mug of coffee with the other, when a single number nearly made me spill the whole thing on my keyboard. That was 16 billion. Now that's the price tag of Dubai's land department kind of slapped on its new real estate tokenization project built directly on the XRP ledger. Let's call it XRPL for short here. Now that's 16 billion. That is with a B for context. And that's kind of like taking every penthouse that you see kind of glittering along the 𝗕𝗘𝗪𝗔𝗥𝗘 skyline, shrink wrapping each square meter into digital tokens and selling them in snack-sized portions starting at a mere 2,000 dirham a pop. Basically, the price of a fancy brunch with extra avocado. Now, more than 3,000 investors piled in almost instantly, proving two things. People love property, and everyone wants a cheaper cover charge to the Dubai real estate party. And so here is where my nerd brain starts connecting dots faster than a kid with a fresh pack of emoji stickers. Now, every time that someone scoops up a slice of those tokenized apartments, the XRPL handles the transaction under the hood, but it needs XRP to grease the wheels. Now, XRP is the native gas-oil lubricant combo that moves value from A to B inside that ecosystem. And unlike those bottomless kind of mimosas, that fuel my kind of Saturday research sessions, XRP has a capped total supply. The more slices of skyscraper that change hands, the more XRP gets parked or at least locked up temporarily. Now that coffee spill I nearly had, it wouldn't have kind of been, or would have been, pretty much justified. But let's face it, Dubai, it isn't dancing alone, right? Across the planet, you got Arium equity partners quietly kind of rolled out a $1 billion fund to tokenize private equity and debt on the same ledger. So picture Wall Street's gated community, stuff like Series B shares and, mezzanine loans, suddenly kind of tossed onto the XRPL like confetti. Now, normally, dipping your toes in that stuff requires a handshake, a silk tie, and probably an invite from somebody named Charles who uses summer as a verb. Now, tokenization slices those assets into neat digital chips that everyday degens, or I should say newly empowered investors, can trade while wearing pajamas. And then in January this year, Ripple inked a deal with Ondu Finance to kind of ferry tokenized US treasuries. Yes, that is the global bedrock of boring but reliable yield onto the XRP. Now, if your grandma's retirement fund, ever meets crypto, this will be their first date spot. And basically, and because I should say, that treasuries are, the comfort food of institutional portfolios, right? And that partnership, it acts like a neon open for business sign flashing in front of the biggest banks on earth. Each treasury token that moves, yep, more XRP passes hands. Now, none of this tokenization wizardry, of course, would matter if the ledger were stuck with kind of 2015 technology like a dusty BlackBerry. But last year, Ripple devs unleashed the MTP standard. That's the multi-purpose tokens. So imagine your ordinary ERC20 with, or maybe even an NFT, had a kind of brilliant, well-behaved child who also graduated law school, right? That's MTPs. And MTPs can be fungible when you need, fluidity, and non-fungible when you want uniqueness, while carrying extra metadata like bond caveats or property deeds. Now, it's the kind of Swiss Army knife, if you will, of tokens. And just when bankers kind of begin asking, but what about regulation? XRP answered with decentralized identity, that is your DID, complete with KYC and AML compliance baked in so tightly that it could double as grandma's apple pie crust. So institutions, they love compliance more than influencers love ring lights. So that upgrade basically rolled out a red carpet. All right then, so let's talk about the numbers here, because that's why you and I hover near screens glowing in the dark, right? XRP is currently chilling at around $2 and some change. Now, for that price to inflate to $100, we are staring at thousands of percent in gains, so around 4,500% rocket ride. Now, that would catapult XRP's market cap to roughly $5.9 trillion, bigger than the entire crypto market today and about as large as Apple, Microsoft, and Saudi Aramco mashed together. So, of course, you can cue the skeptics waving red flags. Impossible. They will yell it from their Twitter, soapboxes. Delusional. The others, of course, type, while, stealth adding to their kind of hidden bags, probably. But let's not be purely hopium powered here, right? There's a good old supply-demand equation here, kind of wearing sensible shoes. XRP has a fixed cap of 100 billion tokens. And thanks to Ripple's quarterly escrow releases, we have transparency on how many kind of drip into circulation. So if tokenization truly goes mainstream, think pension funds trading tokenized land deeds, hedge funds kind of juggling fractionalized fine art, and governments issuing bond tokens. The ledger becomes central plumbing. Institutions would need to hold XRP for settlement, the kind of way that airlines need jet fuel. So each large-scale tokenized asset, it sits atop a fraction of, or it sits atop of a fraction of XRP to shuffle that value. Multiply that by thousands of assets, and suddenly huge trenches of XRP are chilling in cold storage or regulatory custody, effectively vacuuming up the supply off the exchanges. So, demand kind of climbing while float kind of shrinks. Price gets pretty spicy. Now, economics 101, if you will, now kind of serve with blockchain garnish. So let me illustrate with a kind of goofy pizza party analogy then, because food is, well, universal. So picture a giant networking dinner. Pizza represents XRP tokens, and each attendee is an institution. Now, early in the night, there are 100 pizzas for 10 people. Plenty to go around. Now, invite 1,000 more guests, but lock half the pizza in glass display cases as art pieces. Now, hunger escalates, slices vanish, and soon someone's bidding their Rolex for a pepperoni. And boom, price appreciation, or in this case, barter insanity. Now, if tokenization drives up ledger activity the same way that guests, or at least extra guests, kind of drive up pizza demand, well, those XRP slices, they get a lot pricier. Still, hitting $100 isn't a straight line. We would need the overall crypto pie to expand dramatically. So think multi-trillion-dollar adoption across industries and continents. Enough kind of real-world assets would have to, flow through the XRPL so that $5.9 trillion doesn't feel like a cartoon monopoly money. And the good news is that tokenization is basically the grown-up cousin to NFTs, and NFTs already proved people will tokenize literally anything. Pet rocks, tweets, you name it. So swap out JPEGs for blue chip properties or government bonds, and the seriousness level kind of jumps from meme to board meeting. Personally, my first kind of taste of tokenization magic, it happened last year when a buddy pinged me about buying 0.0003% of a whiskey barrel aging in Scotland. And I laughed, of course. Then I kind of clicked the link, and 30 seconds later, I owned a drip of scotch, still sitting in an oak cask around the world. It felt silly and yet undeniably powerful. Now, if that fractional door opened for a niche kind of bourbon collector, just imagine the floodgates when pension funds can shave off micro slices of infrastructure projects or mining rates. Now, those are trillion-dollar pools looking for effective gains like I look for Wi-Fi at an airport. And because XRPL specializes in low fees, near instant settlement, it kind of checks every box except maybe make coffee. But give the devs some time. Now, at this point, you're probably thinking, okay, storyteller, what's the catch? And you got a fair question. Now, one barrier, of course, is going to be the mindshare, right? Ethereum, Polygon, and a dozen layer 2s dominate headlines. Ripple has to convince the suits in skyscrapers and the geeks in hoodies that XRPL isn't just for cross-border payments, but also the golden road for asset tokenization. That's kind of like winning both the Grammy and the Oscar in the same year. It kind of doable, but rarely seen. Another hurdle, of course, is regulation, the boogeyman that turns blockchain dreams into compliance nightmares. Now, the recent addition of DID and KYC knobs is a strong rebuttal, but lawmakers, move slower than dial-up internet. Now, in some jurisdictions, tokenized real estate still sits in a legal grey box labeled, "We'll get back to you." Now, for XRP's price to blast off, we need clear policy, not only in Dubai, but also in New York, London, Singapore, and wherever else big money kind of naps during the week. And let's not ignore the age-old market gremlin either, settlement. Now, crypto Twitter, changes its mood faster than my cat changes nap positions. Now, all it takes is one bearish headline, and your rocket ship starts looking like a submarine. Remember, fundamentals load the gun, sentiment pulls the trigger. Now, tokenization could, be the best bullet that XRP kind of ever chambered, but if the market decides to obsess over shiny new meme coins, that bullet stays unfired. And yet, as we kind of scroll through the real numbers, 16 billion here, 1 billion there, US treasuries moving in digital form, I can't shake that feeling that we're early to a party whose DJ just finished soundcheck. Sure, there's still dust on the floor and the bar's not fully stocked, but you can hear the baseline warming up, and the big guests, the pension funds, the sovereign wealth giants, are already kind of texting the hosts asking for parking instructions. And by the way, guys, speaking of exclusive parties, if you like these kind of deep dive chats and want to kind of pick my brain or just share cat memes while the rest of us watch the charts, hit the link in the description down below and join our free Discord server. We've got channels for everything from on-chain sleuthing to the occasional dad joke competition. And yes, we keep it kind of spam-free and friendly. All right, so let's get back to the kind of ledger saga then. The question that should actually say make or break the $100 dream is the velocity, versus kind of storage then, right? Will institutions treat XRP as a kind of pure utility token, grab it, use it, release it? Or will they hoard reserves to guarantee on-demand liquidity? If it's the latter, we edge closer to the supply crunch. Imagine each kind of mega bank decides to, let's say it wants 500 million XRP as kind of baseline inventory, so transactions kind of never stall. Well, multiplied that by the kind of top 20 institutional banks plus a few giant asset managers, and suddenly half the float is chilling in institutional vaults, meaning retail traders fight for over kind of leftovers like bargain hunters on Black Friday. Now, economists, they call this phenomenon a supply sink. I call it a kind of hotel tower paradox. Hotels, they buy thousands of towers, but once they're in the linen closet, you and I can't go shopping for them in kind of at least bed and bath and beyond, right? They're effectively out of circulation. So if tokenization pushes XRP into supply sinks worldwide, well, the order books thin out and each market buy moves the ticker more dramatically. And that's how you can get candles so tall that they look like skyscrapers on TradingView. The kind of thing that makes leverage traders either celebrate or cry. Okay, so let's sprinkle in another data point. Transaction fees on the XRPL, they remain fractions of a cent, even under heavy load, whereas Ethereum gas fees can sometimes cost more than the asset itself. So for a pension fund moving billions, predictability and cost savings matter more than hype slogans. So it's kind of like preferring a boring Volvo to a kind of flashy sports car when ferrying your kids. Safety first, even if the neon Lambo is cooler. So if institutions can save 10, 20, or 30 basis points per transaction using the XRPL, well, that's real money, millions over time, which boardrooms and boards of directors kind of love to report at quarterly meetings. Add that to compliance features and XRPL becomes less crypto experiment and more financial infrastructure upgrade. Now, of course, no tech stack survives without competitors, right? Biting and nipping at the heels. Stellar, Algorand, and newcomer chains promise similar tokenization toolkits. The race might come down to who builds the easiest on-ramp or who secures that one flagship client that everybody else copies like homework. Think of like when Nike signed Jordan versus other shoe brands. It kind of set the tone for decades. So far, Ripple landing Dubai's land department is a statement dunk, but we need to see how many assists kind of follow. Now, personal story break. 2 months ago, a friend in real estate asked if I would like to kind of co-own a slice of a beachfront villa without a mortgage. Now, my knee jerk was how many zeros in that deposit? He sent me a link, XRPL again, showing fractional tokens. I clicked, connected my wallet, and bought ownership worth less than my monthly internet bill, complete with all the legal docs embedded via MTP. So I'm effectively a micro landlord then. Does that make me a kind of Moogle? Hardly. Does it make the kind of process feel more tangible than scrolling Zello listings that I can't afford? Absolutely. Multiplied that by a kind of user experience across millions of retail investors and who were kind of previously locked out, and well, tokenization stops becoming a buzzword. It becomes more of a bridge. Now, here comes the kind of scene stealer. What happens when secondary markets for these tokenized assets ramp up? Well, liquidity begets liquidity. Once there's a vibrant order book for tokenized Dubai flats or, treasury bills on the XRPL, traders will arbitrage spreads, hedge exposure, and yes, develop leverage. Every click, every trade is a mini demand bump for XRP. Micro doses of pressure all day, every day. Price charts love cumulative pressure the way that kettles love heat. It eventually whistles. But let's not glaze over volatility. Now, if XRP does flirt with triple digits, expect swings big enough to make roller coasters look like moving walkways. Flash crashes fueled by algorithmic trading or simply by whales taking profits. The shake kind of weak hands harder than a Polaroid picture. Now that's kind of where understanding fundamentals really matter. Knowing why you bought helps you survive the dips. Tokenization adoption is a marathon, not a TikTok dance trend. Now, speaking of survival, new investors still get caught up in the SEC versus Ripple drama, the regulatory tug of war that's kind of been in the background noise for years. Now, remember that lawsuit? It's basically the legal version of "Are we there yet?" from at least the back seats. Now, the market used to kind of spiral on every single court filing, but these days price barely blinks. And you might be asking why. And it's because real-world progress, kind of like what we see with the Dubai Land Project and Undo partnerships, it carries more economic weight than courtroom gossip. Utility is slowly drowning out uncertainty. And utility, my friend, is rocket fuel mixed with patience. Okay, so if you're itching to act on all of this information, here's my quick safety lecture. Diversify, research, and for the love of all things shiny, use a reputable exchange. Speaking of which, if you haven't tried Blowfin yet, hit the link that's in the description down below, sign up and see what, see why it's getting so much praise, as the kind of best and up and coming, crypto exchange out there. It's got low fees, smooth interface, and they didn't bribe me with a yacht, though I'm still open to those negotiations. Okay, so we're nearing the home stretch. So let me kind of zoom out here. Tokenization, it isn't just another crypto kind of subgenre, right? It's the sequel to digitization. Now we've moved from paper to PDFs. We went from CDs to Spotify streams. And now ownership rights, stocks, bonds, real estate are lining up for their upgrade. Now every upgrade wave kind of minted new giants. So think Amazon for e-commerce or Netflix for streaming. If XRPL positions itself as the Amazon Web Services of tokenized assets, then owning XRP is like buying a tiny slice of the underlying infrastructure. Okay, so quick mental exercise. Imagine looking back 10 years from now, telling your kind of future niece how you once bought property fragments on your phone during your lunch break. She'll reply, wait, there wasn't a time that you couldn't? That's the normalization curve that we might actually be riding. Now, could I be wrong? Absolutely, right? Maybe institutions, they pick a different chain. Maybe regulators take an unexpected left turn. Maybe alien overlords drop a meme coin and steal all of the liquidity. Who knows, right? Investing always includes risks, and moon targets are hypothetical until they're hindsight. But data points, economic incentives, and real developments steps, I guess they tell us a kind of magnetic story. So here's the takeaway, right? I'm scribbling on my own mental sticky note. XRP at $100 is not guaranteed. But it isn't fantasy either. It hinges on real-world adoption of tokenization, the willingness of institutions to hold meaningful XRP balances, and the kind of broad growth of the crypto market, right? The building blocks, the MTP, the tokens, the decentralized identity, the DID, the billion-dollar pilot projects are stacking like Lego bricks in plain sight. Whether the tower reaches the $100 mark depends on how many more bricks get added and how fast. If we see continued momentum, more governments greenlighting tokenized bonds, more Fortune 500 companies launching on XRPL, and liquidity hubs forming around these assets, the supply-demand equation could tighten enough to make triple-digit XRP less of a meme and more of a math problem with a solvable answer. But as always, mind the risks, buckle your seatbelt, and double check the fundamentals before you swing for the fences.